And part of it is like, look, a lot of people moved into the market when Bitcoin ETFs launched in January. The traditional alt cycle was like people would buy Bitcoin, it would go up, they would get wealthy, and then the capital would flow downhill into riskier assets. People bought Bitcoin ETFs, they got wealthy, and the capital is flowing downhill into riskier assets, but within the TradFi ecosystem, because that's where that capital is, right? And that's part of what explains why we're getting ETH treasury companies and now Sol treasury companies and everything else. It's the same altcoin cycle. Is if you think about why Bitcoin has done so well over the last 18 months, it's been a really simple story where ETFs and corporations have bought something like 5x the new supply.
Yeah.
There's been more demand than supply because we've had this huge growth in Ethereum ETP flows, right? They did, I think, $5 billion over the last 8 weeks. So the same sort of supply demand story that drove Bitcoin for the last 18 months.
Matt Hougan begins with a startling revelation. The cryptocurrency market might be maturing at last. It's possible that the intense, gut-wrenching 70% drawdowns that formerly characterized each cycle are disappearing. We're not in the same market as we were in 2014, 2018, or even 2022, according to Hougan. The structure has undergone significant alteration. One of the most significant changes is the waning impact of Bitcoin halving occasions. Even if fresh supply is still cut in half with each halving, the total quantity of Bitcoins taken out of circulation decreases with each one. In other words, the supply shock that used to set off exploding bull markets is now weaker. And that's only one of the reasons why the cryptocurrency industry may be moving toward greater stability and less instability. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
We put an end to the boom and bust cycle, kind of like how, the boom and bust of the late 19th century kind of gave way to a bit more stability at some point.
I do think the market is going to be more stable in the past. I think some of the factors that drove that boom and bust are now diminished. So an example of those, I think the impact of the halving is smaller, just mathematically, it's half as big each time. I think if you look at the interest rate cycle, we're at a different point in the interest rate cycle than we were in the 2022 and 2018 bear markets when interest rates were going up. Now they're liable to go down as up, right? So that's a different situation. And I do think that the advent of regulation will reduce the blow up risk that has been the catalyst of so many sharp pullbacks, right? If you go way back in time, what caused the blow up in 2014? It was Mt. Gox collapsing. What caused the blow up in 2018? It was ICOs being shut down. What contributed to the blow up in 2022? It was a cavalcade of disasters. Luna, FTX, 3 Arrows Capital, etc. Now that we have, and as we get better regulation, you would expect that to be reduced. And then at the same time, you do have institutions turning towards crypto. And unlike retail, they're battleships. They're not speedboats, right? They take years to turn. One of my favorite statistics and most painful statistics is the average Bitwise customer allocates after about 8 to 10 meetings. If you think about what that means for a pension fund that started looking at Bitcoin when the ETF launched, they haven't gotten through 8 quarterly meetings yet. That's the speed. They'll get there in 2026. So I do think for that reason, the cyclicality will be compressed. There'll still be volatility, but I don't think we'll see 70% drawdowns. Yeah, it's alt season in the traditional capital markets for sure. Bitcoin treasury, ETH treasury companies, IPOs. I think that's part of it, Andrew. And part of it is like, look, a lot of people moved into the market when Bitcoin ETFs launched in January. The traditional alt cycle was like people would buy Bitcoin, it would go up, they would get wealthy, and then the capital would flow downhill into riskier assets. People bought Bitcoin ETFs, they got wealthy, and the capital is flowing downhill into riskier assets, but within the TradFi ecosystem, because that's where that capital is, right? And that's part of what explains why we're getting ETH treasury companies and now Sol treasury companies and everything else. It's the same altcoin cycle. Is if you think about why Bitcoin has done so well over the last 18 months, it's been a really simple story where ETFs and corporations have bought something like 5x the new supply.
Yeah.
So there's been more demand than supply. Well, actually, since the start of May, ETFs and corporations have bought 32x the supply of Ethereum because we've had this huge growth in Ethereum ETP flows, right? They did, I think, $5 billion over the last 8 weeks. And we've had this huge growth of corporations buying Ethereum. So the same sort of supply demand story that drove Bitcoin for the last 18 months, and Ethereum just kind of sat there and went down, is now happening in Ethereum. So there's a vibe dynamic and there's a supply demand dynamic. And you have to ask yourself, will these vibes continue? Absolutely. Stablecoins and tokenization are going up and to the right from interest levels. And then will the supply demand dynamics continue? I think absolutely. Ethereum inflows don't look to me like they're going to reverse. And these ETH treasury companies are trading at something like 2x their NAV, which means there's going to be more of them. So at least from the short term, I think the trends we've seen since the start of April really are going to persist in ETH, and I'm pretty bullish, and I think it'll get to new all-time highs. I think we get above new all-time highs. I think it may well outperform Bitcoin through the end of the year, and I'm very bullish on Bitcoin's price. But I don't know that we, what is that, a 4.5x from here? I'm not sure that that's in the cards, but I do think the trends are all in its favor. Supply-demand dynamics, stablecoin and tokenization interest. I think it's a very bullish outlook for Ethereum. Maybe not Tom Lee bullish, but very bullish.
According to Matt Hougan, we shouldn't only consider a company's greatest moments when determining its value, whether that be for Coinbase or Ethereum itself. He suggests a long-term mixed strategy instead, much like economist Robert Shiller utilizes the CAPE ratio for the S&P 500 by averaging earnings over a 10-year period. This involves looking at both the highs and lows, the booms and busts, in order to obtain a more realistic and balanced perspective on value in the cryptocurrency space. However, even that could understate the possibilities. Hougan notes that Ethereum's value would surpass $400 billion if it were to actually establish itself as the foundation of the global financial system. It might easily reach $4 trillion or higher. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
I don't know how excited they are about this, but they have accepted it as their reality. And so they need to build to it or risk being disintermediated or marginalized in some form.
It's exactly right. This is like the moment when Walmart realized it needed to build a website to compete with Amazon, right? Yeah. Now you have Visa, MasterCard, PayPal, Goldman Sachs, everyone realizing that they need to be ready for this era, that we could be dealing with, multiple trillions of dollars of stablecoins and multiple trillions of dollars of tokenized real world assets in the next year or two. Right. I mean, it's moving at that speed. So I do think that is a major fundamental shift. I do think it's akin to the internet going mainstream. And I don't think we'll ever put the genie back in the bottle. I think now that we're through, it's now part of our mainstream financial infrastructure in a really fundamental way. I absolutely think that's true. Stable coins are sort of a skeuomorphic tool for crypto. There's something that matches our existing understanding of how finance works, but just makes it faster, quicker, better. I find that traditional investors can understand stablecoins faster than they could understand Bitcoin, and certainly faster than they understood something theoretical like blockchain, that you're trying to describe how this technology worked. It's like, no, here are dollars that move at the speed of light and settle instantaneously around the world. And people say, oh, that's cool. So I do think it's really helped with the vibe shift. I think it's made crypto real. Yeah. And it's also brought in Wall Street, which is important because it solidifies the regulatory environment for crypto, right? It's no longer crypto versus Wall Street, it's crypto and Wall Street. And that means that Washington is now pro-crypto on a long-term basis. And that's been the other major vibe shift that I think it's brought on. On this one, we really saw two things at work. So on the one hand, we were optimistic on the outlook for crypto. And if you're optimistic on the outlook for crypto, you think the market for companies building in this space is growing and substantial and there to be. The other factor that went into that prediction is that the IPO market was severely repressed by US regulators for the 4 years prior to this election, right? Circle, as an example, which for what it's worth has been the most successful IPO in the US in, I think, 10 years, right? It was 25x oversubscribed. The price has gone up 8-fold. It's been huge. Mm-hmm. It tried to go public for 3 or 4 years, but the SEC wouldn't let it out. And so we saw all of these firms that were substantial in size, whether it's eToro or Circle or Kraken or Chainalysis or some of the others that are in the pipeline, that were sort of just waiting at the door. So once that regulatory environment changed, we thought they would run out. Now, I do think it's primed for this moment we're in, because there are a lot of professional investors, institutional investors, financial advisors who want exposure to crypto, but are more comfortable with these companies. And I think that these IPOs and crypto equity ETPs are feeding into that group that want exposure because they know crypto is happening, but maybe their risk departments aren't comfortable with owning Bitcoin. But you can have exposure to Circle, you can have exposure to Coinbase, you can have exposure to some of these pre-IPO companies. So we think this trend is going to accelerate. You know, when we think about Coinbase's or Ethereum's long-term valuation, I think you need to treat it akin to how you treat a cyclical stock, which is effectively to blend the earnings across a full cycle, right? Particularly because crypto has been so cyclical. I think it'll be less cyclical going forward, but you can't just look at peak earnings because, as you said, valuations would look cheapest at that point. You know, if you look at Coinbase historically, if you blend earnings or maybe do an exponential weighting of blended earnings over the last 4 years, I think you get something closer to its true valuation. I don't know if you're familiar with the CAPE statistics that Professor Schiller used to put out about the stock market, but he would look at price to earnings across like a 10-year period. I think in crypto you have to do something similar to that, or you can take the approach that's equally appealing to me, which is we're still in the very early phases of this, right? And so what matters is market share. To Alex's point, a lot of activity is taking place on layer 2s on ETH. It's very dispersed. But from my view, the ETH bet is that a huge chunk of the world's money and assets will move over ETH. That's the bet you're making. And if that's right, it's not a $400 billion asset.
Yeah.
Right. It's a $4 trillion asset or something above that. And that's like enough valuation work. Really, I can do the DCA stuff. I can do, but in the end, that's the bet I'm making when I buy ETH, is that this will be the rails for most of the world's money and assets, the same way the internet is the rails for the world's communication. And boy, will that be valuable. So I sort of think you can take either approach when you think about it.
According to Matt Hougan, cryptocurrency is entering a more developed and exciting phase, one that is open to a wider spectrum of investors, including both large institutions and private citizens. Regulations that have slowed innovation and public listings for years are finally beginning to loosen. As a result, a growing number of powerful, well-established cryptocurrency businesses are now having the opportunity to go public. This makes it possible for conventional investors who wish to gain exposure to the market but might feel uneasy holding Bitcoin or Ethereum directly. However, while attempting to appraise these assets, Hougan cautions us not to get caught up in short-term figures or peak earnings. The real picture may be distorted by the unpredictable cycles that cryptocurrency has seen. Rather, he encourages us to consider the broader trend, much like stock market experts do, which may involve integrating profits across time or merely acknowledging that we are still in the early phases of a significant event. In retrospect, Ethereum's current worth will seem insignificant if it ends up serving as the cornerstone of the global financial system. Bitcoin and Ethereum ETFs are currently growing the cryptocurrency ecosystem, much like gold ETFs did in the beginning of the 21st century when they increased interest in and investment in the gold market. They are drawing in a completely new group of participants rather than displacing existing investment tools. Whether you invest in cryptocurrency directly or through publicly traded companies and exchange-traded funds, Hougan thinks that's a good thing for everyone. Therefore, if you're wondering where cryptocurrency is going, this could be the start of something far more significant. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.